Here's how traders should deal with weeks filled with high impact news. Discover my method I use to minimize losses and maximize gains in high volatile markets. In today's review, I want to take you through a week filled with high impact news and my method that I use to minimize losses in these market conditions. What's good, people, traders, and dedicated gold chasers? Today we're diving into a roller coaster of trades that took me through the ups and downs in the market. From anticipating bearish trends to riding bullish momentum, this week's review is filled with information and knowledge that every single trader needs to know. So stick around as we break down the highs, the lows, and the lessons learned when you trade in a week filled with high impact news.
So let's start with trade number one. So looking at the higher time frames, the daily chart was clearly bearish the previous day, which was the 29th of April, signaling a potential downtrend continuation after the recent bullish push. Moving down to the 4H time frame, we saw a confirmation with a bearish 4H Asian close on GJ. Now, additionally to this, what you're going to see now is that I'm going to run through all other pairs on my watch list, and you'll see that we had an extra confluence across 4H pairs, which is what we call 4H correlation. And this then signaled to me that market sentiment was behind us in this trade. So let's go through it. So we had pound yen being bearish, then we had GBP USD being bearish, we had Euro JPY being bearish, we had CAD JPY being bearish, USD JPY being bearish, and finally AUD JPY being bearish. Zooming into the 15-minute chart, we identified structure being bearish below these areas. Let me mark it for you guys. So structure was bearish below those areas in and around 197040 to me, and the reason why I state that is because price action on the 15-minute time frame was making lower lows and lower highs, and that was our most recent lower high. Now, with that being said, when we get to our trading session, all I anticipated that if price action stayed below 197040 and we continue to break areas that we create in the market, there's a high chance that price action could then push to the downside. So what was the key levels that I was looking at? The key level I was looking at this point in time was the 196,600 area, to be specific. So let me mark that 196,600, and upon the breakout of that area, which you can see occurred right here at 7 o'clock, when price action broke out of the 196,600, it further confirmed our bearish bias. So I then scaled down onto the 1-minute time frame to start anticipating entries. So scaling down onto the 1-minute time frame, what you can see is that this was the 15-minute level. We had the break and close below these levels. We had the pullback, and as you can see, that pullback then in turn created that specific level. And that level to me was the level that I needed to be broken on the 1-minute time frame. I then went ahead and placed my sell stop in and around 196,500. I had a 12 pip stop and I had a 24 pip TP aiming for a 1 to 2. Now price action pushed in my direction and just about missed my break-even level, and then we pulled back and hit stop loss. Now, as you can see, my stop loss was placed quite clearly above the previous lower high in structure on the 1-minute time frame, and it's just unfortunate that we missed the break-even and price action pulled back. Now, on to trade number 2, which was taken on the 1st of May. As you can see, the initial daily candle closed bullish indicating bullish sentiment, suggesting a potential uptrend continuation. However, if we jump onto the 4H, what you can see is that the 4H chart during the Asian session displayed a weak bullish close, and you literally have to zoom into the chart to see that it was a bullish candle. So as you can see, this was a bullish candle, but it was more so doji than anything. So let's go through what we call 4H correlation to see whether we have market sentiment behind us. So we're going to go on to pound USD. So as you can see, GBP USD actually closed bearish on the Asian 4H. So what we have now is we have mixed sentiment on the pound, which made things a little bit uncertain. But as we go through yen, what you'll see is that the yen exhibited weak bullish sentiment, indicating yen weakness. Let me take you guys through the 4H chart to check 4H correlation. What you can see is that Euro JPY was bullish coming out of Asia. We have a bullish candle on CAD JPY, and then on USD JPY we have a bullish candle, and on AUD JPY we had a bullish candle, thus expressing the weak yen sentiment as I mentioned. And this then makes me believe that I could potentially target a 1 to 2. And let's jump into the 15-minute. So zooming into the 15-minute time frame. So because of the 4H candle being doji like or doji in nature, however being bullish, what I needed was for the 15-minute time frame to break above the previous 4H highs. And you can see that the previous 4H high was in and around 197.106, and we had the break above that area around about 9 o'clock, and this was around London Open. So we had London Open volume breaking above that previous 4H highs, which I needed in order to confirm that there was bullish bias in the market. And upon that breakout, what I needed then, a further indication of an entry or potential entry for myself, was that I needed a pullback to create an area in the market where I could see a breakout. So I needed a breakout level to be created. And what you can see is that that breakout level was created in and around, let me do this, in and around 197.170. That was my breakout levels that I needed. And as you can see, around 10 o'clock, an hour into London Open, we had the break and close above the breakout level. And what this then indicated is that I could then zoom into the 1 minute time frame and I can start looking for entries. So stepping down into the 1 minute time frame, what you can see is that the 1 minute time frame was clearly bullish at this point. We had the break and close above the 15-minute area in around this candle. And after this, what I then did was I placed my key level in and around 197.230, and my other key level where I would place my sell stop below in and around 197.177. So my rule says that I need to place my buy stops in and around full numbers. So what I did was I placed my buy stop around 197.250, and my stop loss was hidden below these higher lows. As I mentioned, I had a 8 pip stop below 197.177, and I targeted a 1 to 2 with my take profit being around 410 for 16 pip stop loss, 16 pip take profit, and an 8 pip stop loss. Now what you can see is that price action triggered here due to spread. However, we had the clear above these areas, so we made a higher high. Price action then pulled back, correcting itself, forming a higher low, however holding me in, and then we had an impulsive move to the upside, creating the new higher high and having me move my stops to break even at that point. What you can then see is that price action pulled back and took me out at break even. So to summarize my trades that I've taken, trade number 1 resulted in a stop loss hit, meaning minus 1%, while trade number 2 ended in a break even after a deep correction. These trades emphasize the importance of managing risk while trading in weeks filled with high impact news. And that is the key when you trade in weeks filled with high impact news. It's all about managing risk, having a plan to determine what your bias is, and following that specific plan. Taking a look at our journal, what you can see is that these are the 2 trades that I've taken this week, a -1R and a 0R. So we've taken a total of 58 trades so far for the year, with a win and break even rate of 53.45% and a total R of 3%. Let's just look at our yearly equity curve. So you can see the yearly equity curve looks quite healthy at the moment. We've had our downsides in first quarter, and now what you can see is that second quarter in turn has brought good momentum to the upside. Let's just take a look at April. So looking at April, from the 1st of April until the 30th of April, you can see that we've taken 16 trades for April with a win and break even rate of 75%, totaling in 7R. And that is extremely good. Looking at the equity curve, you can see that we don't have too much downside movement, and it was a really quiet month in terms of numbers of trades. However, it was a good turnout for actual return out of the markets.
And there you have it, traders. Another week, another set of trades dissected. Remember, trading isn't just about wins and losses. It's about the journey and the knowledge gained along the way. So if you like this video, don't forget to hit the like button, subscribe, and turn on the notification bell to get the notifications whenever we drop more trading insights. Until next time, remember that your unmatched perspicacity coupled with your sheer indefatigability makes you a feared opponent in any realm of human endeavor. So from your boy Marcy at the Modern Day Trader, have a wonderful week, a profitable one.